Welcome back to the Mr. Investor channel. In today's video, we're talking about three massive trending stocks: Lowe's, Apple Incorporated, and Twitter. So settle in comfortably and watch the video carefully. But before we start, subscribe to our channel and turn on the notification if you haven't already. That way you'll be notified when the new video is ready to watch and you won't miss anything. If you did this, let's get started. Number 1. Lowe's. Lowe's Companies Incorporated, often shortened as Lowe's, is an American retail company specializing in home improvement. Headquartered in Mooresville, North Carolina, the company operates a chain of retail stores in the United States and Canada. Lowe's is the second largest hardware chain in the United States. It's also the second largest hardware chain in the world. It's been one of the most searched for stocks on Zacks.com lately. When earnings estimates for a company go up, the fair value for its stock price goes up as well, right? And when a stock's fair value is higher than its current market price, investors tend to buy the stock, resulting in its price moving upward. Because of this, empirical studies indicate a strong correlation between trends in earnings estimate revisions and short-term stock price movements. Lowe's is expected to post earnings of $3.25 a share for the current quarter, representing a year-over-year change of plus 1.3%. Over the last 30 days, the Zacks consensus estimate remained unchanged. For the current fiscal year, the consensus earnings estimate of $13.40 points to a change of plus 11.3% from the prior year. Over the last 30 days, this estimate has changed by plus or minus 0.2%. For the next fiscal year, the consensus earnings estimate of $14.74 indicates a change of plus 10% from what Lowe's is expected to report a year ago. Over the past month, the estimate has changed plus 107.2%. This sounds pretty good, right? Let's move on. Number 2. Apple Incorporated. Apple Incorporated was founded by Stephen Paul Jobs, Ronald Gerald Wayne, and Stephen G. Wozniak in April 1976 and is headquartered in Cupertino, California. It engages in the design, manufacture, and sale of smartphones, personal computers, tablets, wearables, and accessories, and other varieties of related services. It operates through the following geographical segments: Americas, Europe, Greater China, Japan, and the rest of Asia Pacific. Apple has been one of the best and most consistent blue-chip tech stocks of the past decade. In the near term, Apple will continue to face uncertainties surrounding supply chain disruptions and geopolitical tensions in Asia, where the vast majority of its suppliers are located. However, Apple reported 9% year-over-year iPhone revenue growth, 24% services growth, 13% other products growth, and a whopping $34.6 billion in net income in the most recent quarter, once again demonstrating its world-class business model. And we have reached the end of our shortlist. Can you guess who's in third place? Number 3. Twitter. Twitter is an American microblogging and social networking service on which users post and interact with messages known as tweets. The service is provided by Twitter Incorporated, a corporation based in San Francisco, California, and has more than 25 offices around the world. Twitter was created by Jack Dorsey, Noah Glass, Biz Stone, and Evan Williams in March 2006 and launched in July of that year. By 2012, more than 100 million users posted 340 million tweets a day, and the service handled an average of 1.6 billion searches queried per day. But what about Twitter stocks? Outspoken Tesla CEO Elon Musk purchased a giant stake in Twitter, making him the largest outside shareholder in the social media stock, not long after criticizing the company for what he said was its failure to uphold the tenets of free speech. Musk owns over 73 million shares of Twitter, which represents a 9.2% passive stake in the company, according to a Securities and Exchange Commission 13G filing. The stake is worth $2.89 billion based on Twitter's closing price Friday. While it is classified as a passive stake, investors were bidding shares higher on the chance that could lead to something more. The Twitter stock surged by more than 27%. Well, that's not a small amount at all. Did you manage to follow the video? We've tried to present this topic to you as clearly as possible, and we hope that we've succeeded. If you have any comments, please feel free and write them in the comments section below. We'd like to know your opinion, so please share it with us. Don't forget to subscribe to our channel and press the notification bell so you don't miss more videos like this. If you enjoyed the video, press like. Well, that's it for today. Thank you for watching, and meet you again soon.